Hello, everyone. My name is Jack Nikogosian. I'm very happy for the opportunity to share this video with you and to give you a little bit of insight into the world of stablecoins and what Aryze is doing. Thank you a lot to Jackie for organizing and for the organizers. I think this is the first time that I'm doing one of these sessions with Jackie without her actually physically moderating it or without her actually interviewing me. This time it'll be a little bit different. It's an opportunity for me to just speak from the heart, tell you a little bit about who I am and what I've been doing with the company Aryze, what our plans are regarding stablecoins and programmable money, and tell you a little bit about how I got into this whole Web3 game and how I've seen it evolve. I'm going to take it a few steps back. About 10 years ago, maybe a bit more now actually, I saw Bitcoin being a thing, right? It was a very small thing. I think I got into Bitcoin when it was around $15 a Bitcoin. And unfortunately, like most of the people back then who got into Bitcoin, they don't have them anymore. So the 2-3 Bitcoins that I bought back then, they quickly surged in price. And then I thought, what is this? What is Bitcoin really? I mean, it's an asset that went up in price, but what is it really? And in school, I was a student, so I started just exploring Bitcoin and crypto out of curiosity, being I guess, a nerd at heart. I thought that this is something I want to spend my time on. I dug into Bitcoin on forums and online. Then I created a Facebook community here in Denmark because there was literally no one talking about crypto back then. It was just a handful of people. So I started this Facebook group, Bitcoin Talk Denmark, like an extension of the official Bitcoin Talk channel. It was one of the first online forums, bitcointalk.org. So I kind of just created Bitcoin Talk Denmark on Facebook and we quickly gathered some people. We became the largest Scandinavian crypto forum. It was actually a really good community of people. But what happened here is that I applied for an internship, just openly said, hey guys, if anyone knows a spot where I can just contribute, I know about marketing, I know about like entrepreneurship, I can build stuff, can you use me? And there was a guy who wrote to me. He worked at a crypto startup in Copenhagen. It was called Beeps, and they were doing a merger with another company called Bitcoin Nordic. So Beeps and Bitcoin Nordic was planning on kind of joining and ended up doing so and becoming Coinify. That meant that I got to experience I think I was the fourth or fifth guy who joined Beeps, which means that I got to join that company and see it grow into becoming Coinify and getting its first funding. And that whole startup race was really inspirational for me. Now, what Coinify did was process Bitcoin payments on behalf of merchants. So if you're a shop and you wanted to accept Bitcoin payments, you could do so via their payment solution. Like they had an app, they had a checkout solution, and that was because while some people wanted to accept Bitcoin payments, merchants like anything from small pizza places to larger organizations, it was extremely difficult accepting Bitcoin, selling it to fiat, real money, and then getting that paid out. So Coinify built a company around this, and I quickly joined early on in those days, and I kind of fell in love with Bitcoin, not because of let's all get rich and Bitcoin will be $1 billion and all that, but more of the fact that you could use it as programmable money without anyone really telling you yes or no. Right? Traditionally, if you want to do anything related to PayPal, like you do knitting, you do any kind of work, you're a barber, you do any kind of work and you want to accept payments, you meet a bank or a PSP or some kind of middleman that needs to tell you, you are allowed to do this. You are allowed to take this person's money and get that money into your own bank account. And of course, that's why we have the PayPals of the world. And here in Denmark, we have Nets as the biggest player. We have you know, thousands of global of PSPs and payment providers that, you know, make it easier for merchants to accept payments. Coinify was one of them. They made it easier to accept Bitcoin payments. But what essentially was happening is that they took an asset, they sold it on an exchange, and they paid out the fiat to the bank, to the merchant bank. And while that was pretty cool for shops who wanted to accept Bitcoin payments, for me, I was always a bit, it's like on one end you have smart money, say Bitcoin. It is programmable money. It is, you know, we can get into, I will get into that in a little bit, but it's decentralized, it's transparent, and it's a, you know, scalable alternative to fiat payments. There's a lot of good stuff. So let's just call that smart money. So what we were actually doing is we're taking smart money and making it into dumb money, like taking Bitcoin and turning it into euro, or taking Bitcoin or turning it into US dollars. And while that was interesting, the people who were actually in the sector of crypto and in Bitcoin, they were hoping for Bitcoin to be the smart money, or cryptocurrencies to become the smart money vehicle used for payments, where you would not need to make your smart money dumb again, but you could just fully interact in smart money. And in the early crypto days with Bitcoin, the kind of Bitcoin evangelists, a lot of them thought that Bitcoin should be this payment vehicle that the user holds and the user pays in, and the recipient receives, and the recipient pays their salaries in, and like creating an ecosystem around Bitcoin. That was a big part of the original attitude started Bitcoin. Now, Bitcoin was kind of the first big one, the first big cryptocurrency that came out and got a little bit popularized. But it wasn't a long time until Ethereum came along. Of course, many other things as well, but Ethereum was a very, very important enabler because it could take the concepts and the technologies of Bitcoin and add layers to it that enabled Ethereum to do things that Bitcoin could not. Bitcoin is, you could think of it kind of like digital gold, where you have one Bitcoin is one gold coin. But as you can split up the Bitcoin into fragments, so can the gold be split up into like grams or milligrams. So what we did before Ethereum, when there was only Bitcoin, I remember in an experiment, we took like some of the smallest fragments you could of a Bitcoin, and then we ingrained into the transfer of when sending that little Satoshi and that fragment, when sending that on the Bitcoin blockchain, we would ingrain data inside the metadata of the transfer itself. Kind of the analogy would be you take a gold coin, you take a fragment of that gold coin, and in that fragment you encode some data. And that data in our experiments early on was 1 coin equals 1 Danish krone. And you know, if you did that 1,000 times, then you had the equivalent of 1,000 1 krone coins, right? Where one token could be different from the other token, even though it's fundamentally the same thing. They're both a token. But because of the uniqueness of each of them, and the fact that you can't just copy and paste Bitcoin and create Bitcoin again, or create another coin, the fact that we have the uniqueness of the scarcity of the fragment, and we could, inside of that, make it worth 1 Danish krone, and we could do that more and more times, we could actually create cash IOUs using Bitcoin tokens. This was again very early on in the crypto Web3 kind of journey of mine, and we only had Bitcoin. We kind of had to wait for Ethereum to get invented. But this first concept of taking a fragment of a Bitcoin, calling it 1 Danish krone, and then doing it again and again and again, That was actually what today could be recognized as a stable coin. It was a way for us to create cash representations using blockchain technologies. And back then it was only Bitcoin. So that's the blockchain that we used. Later on came Ethereum and many other technologies that made it easier and more efficient to issue tokens directly onto blockchains. That's why we saw the rise of ICOs, initial coin offerings, where companies and projects could fundraise their projects and their journeys via cryptocurrencies. So you could receive funding in Ether, and you could say, for every 1 ETH I get, I create 1,000 Jack coin. And that is for a project I'm doing. Now that created the whole ICO era. And that during that era is when I left Coinify, my previous workplace, and I went back to school to continue my education. And during that continuation, I created Aryze. Aryze was created initially to make dumb money smart, because I wanted to take these ideas of stable coins and see if we could make it real, and real in the sense that I wanted to create a e-krona, a digital Danish krona. So I wrote a white paper, and I applied for a government grant with the Danish Innovation Fund, where the Danish government is helping to support and finance startups with mentoring and capital and different things. So I spent 1 year creating this company under the Danish Innovation Fund and their mentorship. And this was the birth of Aryze. Me working with cryptocurrencies, experienced in Bitcoin, recognizing we can do something like digital cash, doing so via Bitcoin, experimenting many years and waiting for the ecosystem to grow and to mature and to help contribute to make it so, to then creating the company Aryze to make smart money solutions. That's essentially been my journey for the last 10 years. There is still a lot of, in my opinion, misunderstandings and different opinions in what is crypto, why? What's the why of all this, right? Money is super digital already. The Danish national currency is like 95, 98% digital. I think Sweden is even more digital. And countries that have been traditionally analog are digitizing rapidly. India, for example, when I went to India a few years back, I mean, almost anywhere I could pay with my phone and scan QR codes. So why is it that we even need cryptocurrencies? And many of the newcomers in this sector, I would say the ones post-Circle or post-USDC, the ones that came into the realm when crypto was not in its infancy, but it had kind of reached a good level of maturity, those people do not maybe have the same ideological visions of the why behind it. The whole reason that blockchain is interesting and not really the same as traditional siloed solutions is this word decentralization. And there are many ways of explaining what this is. You know, simply put, when I go to Google, I'm essentially the product and the client at the same time. So Google can give me a service, but my data is their product to sell to advertisers. And me you can see, I'm a node. I would connect to Google here, and there's another person who would connect to Google here, and there's another person who connects to Google here. And Google is kind of, say, the central point of failure or the central point of success. It is just a centralized solution, whereas the mission or high-level ideology behind blockchain is that you have a chain of transfers, and you can't really delete the first part of the chain. It's like a notebook you write in without an eraser. With an ink pen. Like, you cannot delete it, you cannot erase it, you cannot pretend it didn't happen. So when person A sends money to person B, that's recorded on what we say on chain. And that means essentially in this database that follows like a train, like train cards, that the data will always remain. And the way that we check who owes what, or what is the truth of this state, it's essentially by looking backwards. Say, all right, well, if Jack sent money to Anton and Anton sent money to Bob and Bob sent money to Charlie, then it makes sense that Charlie has assets on his wallet. It's not that, yes, PayPal says so, then it's good. We trust it. It's more cryptographically enforced and mathematically proven. But what does this really mean then? Well, it means that you don't have the same barriers to work with cryptocurrencies and digital assets that you would have with fiat money. If you got money in Deutsche Bank, that is Deutsche Bank euro. If you have money in Nordea, that is Nordea euro. If you have money in Bank of America, that is Bank of America dollars. It's maybe called US dollars, but it's a debt issued by, for example, Bank of America. And that's why that dollars in Bank of America cannot just become euros in Deutsche Bank, because the entities holding it don't really trust each other fully. So you have entities that want to transact with each other, these silos, in my example from Google before, that want to transact with each other, but they don't really trust each other because they each have their own silo. On the other end of the spectrum, you have the blockchains, where you can mathematically and cryptographically prove or disprove trust. So there's this huge mismatch. And we like to think that blockchain and the ideology of not erasing, that is an old practice. Sorry, that is a new practice, but in fact, it is an old practice. And I have a little fun anecdote that maybe only me from Denmark can know about. But the Danish word for deed, like the deed to your property, it's called skød. Skød. The literal meaning of skød is lap, like your lap. And that word came from the tradition of how you would actually transfer property in like old Denmark. And an example is that the way that it will be done is, say you have a village where Anton owns a house that he wants to sell to Charlie. The villagers would meet in a circle in the town square, town hall, whatever. They would meet up in a circle, and then person A would take soil from their ground, from their property, like physical dirt, the soil, and then they would go over to the person they're selling to, and they would throw this soil onto the lap of person B. This was a symbolic gesture that I have now transferred this deed onto you. And well, this was not written down. This was remembered into the memory of the villagers, of the people who lived there. So if person A took soil and threw it onto the lap of person B, all the villagers would then, or the elders or the men in the village would gather up and they would approve or disapprove it, because person A can only do this if this has previously been done to person A in the first place. Because if Jack is trying to transfer to Anton, well, Bob has to have transferred to Jack in the first place. So does Jack have this property that he is now trying to transfer? Has it been transferred to him in the first place, yes or no? And you would have consensus in the group of villagers. 9 out of 10 men said, yeah, Jack, we're good to go. We remember 10 years ago this property was yours. Then this would just be the new truth. This would be the new status quo. This is kind of how Bitcoin and blockchains today work, is that the network has to have consensus. Is this transfer legit or not? And they do so by looking backwards into the ledger and saying, does this wallet, does this person, does this entity have the right to try to transfer this asset that they are trying to transfer. The deed, the school story stopped mostly because of the powers that there went and centralized it, and made it into a centralized ledger. The king had the overview of who owes what. It became way, way, way more like it is today. But it's why am I telling the story is that a lot of these ideas behind cryptocurrencies and behind blockchain is not new ideas. It is old ideologies that have been rewoken via new technologies. And what it means for us today, and what I want you all to take from this is you would maybe look into USDC or USDT as a finished and final product. Oh, look, here's a stable coin. Here, let me use it. Or looking into Bitcoin saying, oh, here is Bitcoin. Let me use it or let me ignore it. But that's not the attitude I have with these things. For me, these are evolving technologies. The two largest stablecoins, Tether and Circle, today, they're the largest today, but they are very set in stone into what they are, a dollar IOU on a blockchain. And for everybody listening and people who are interested in this, I don't want you to look at blockchain or cryptocurrencies or stable coins as being one single thing. Think of it way more like a tool in your palette of tools or in your toolbox that can be used if you understand the tool. And the way that these technologies can be combined, it kind of is almost like wizardry. The way that, for example, a municipality can issue a geo-fenced project via GPS locations and then automate pay-ins and payouts, manage it all via stable coins and blockchain technologies, and then do local municipality projects or reforestation projects where you tokenize the timber or the timber to be the future wood. There is not a single sector where I would say this sector absolutely could run only on crypto. And there is also not one where I would say this could run without crypto. It's kind of the same thing with AI, that it is a tool, it is an accelerator, and it's a vehicle that we as humans can now use to manage data way more efficiently than we were able to do thus far. And blockchain technology is that for value and for money and for assets. If an alien civilization came and visited Earth, I think that they would be very impressed with what we have done for the last 100 years. And then I think that they would cry, laugh when they saw how we manage our money and our world economies and the amount of dirt and lack of transparency that there is in world economies as a whole. I think that they would literally fall off their alien chairs and start crying and laughing of how ridiculous money flows and money still operates when we see what we as mankind can do and what we are doing. Aryze, we're in the sector of programmable money and of smart money. And we're one of the few companies who's actually been here so many years. Since 2017, we started a stablecoin company. I think it makes us one of the oldest crypto companies in the world. And something we're extremely proud of. And that's because of our agility to navigate these ever-changing waters, because it's not just one thing. Initially it was all about making an e-krona. Now Aryze is not that. Now Aryze has a stablecoin factory where we can issue branded stablecoins. We can issue, for example, a municipality-specific US dollar or a project-specific euro coin. We can work very closely with governments and government-related, government-adjacent entities to make these so-called CBDCs, central bank digital currencies, because there are some nations and some places around the world where this can be really, really valuable. We can also be the issuers of, branded coins like we see, for example, in the US, there was a push towards a Walmart stablecoin. There's different pushes from PayPal. We know that PayPal has their own branded stablecoin. These stablecoins are often not issued by for example, by PayPal or by Walmart, but for example, some underlying issuer like Paxos. What we can do is that we can be that issuer in essentially most modern currencies. So we're not bound to the euro, to the US dollars. We can issue stable coins in various sectors and various various currencies, and that actually is really unique for us. Most of the other larger players, they focus on euro and dollar, but nobody really cares about Trinidad dollar or Armenian dram or essentially currencies around the world, Brazilian reais or Mexican pesos. Not saying nobody cares about it, but there's a less focus on those exotic currencies, and that's a big challenge because the world it's a big place. And what Aryze realized early on is that it's not about e-krona, it's not about e-dollar, it's not about e-euro, it's about e-money, it's about smart money. So we created a stablecoin factory so we can issue stablecoins. And then we created a tool we call Reforge. Reforge is a tool where we can do Forex. You can do Forex with yourself. Like we turned Forex from an industry into a line of code. Because traditionally, if you want to exchange money, euro to dollar, you need the banks, you need the middlemen, you need the liquidity providers, you need, the person to go to work with their car and click the document and do the actual deal. That's why the aliens are laughing. And what we did is we created a tool we call Reforge. It was inspired by again the idea of how you can melt gold and then turn it into something else, but you bring the value. So if I bring a gram of gold from a necklace and I melt it and I create a ring instead with that gold, then it's as valuable, it's just a different format. So I thought, why can't we just do that with euro to dollar and dollar to British pounds and so on? So we emulated like a shredder, where we said, what if you take $100 bill, run it through a shredder? Don't put me to jail yet. I know that's illegal. This is metaphorically speaking. So you put the $100 bill through the shredder. You take all the pieces and you glue them together, and it becomes British pounds or it becomes Danish krona. That is essentially what Reforge does. If you have 1,000 dollars, via Reforge, you can burn them. So they're removed entirely from circulation. But because stablecoins we issue are fully backed by cash and government bonds, they're fully redeemable. It means that just because the token is burned does not mean that the actual cash vanished. So we are in that sense over solvent with our issuance. And that over solvency is what gives the user the right to mint, for example, e-pound or e-euro. With this simple mechanism, we can burn and mint, burn and mint, burn and mint, essentially real time, which is way more similar to how the banks, they do intra-bank settlements with IOUs and UOMEs between each other. Whereas stablecoins and competing solutions today don't do that at all. Like if you want to trade $1 million in USDT, you need to go to a market which has those dollars and a lot of extra USD dollars pre-minted so that they're available on a marketplace, because they essentially act as if they are Bitcoin, as if it's a true bearer asset where, I can only buy a Bitcoin if somebody else sells it to me. And with stablecoins, it's kind of the same thing. You need Tether or USDC or USDT. You need them to mint coins that they put on an exchange that a user can then interact with. Where our logic made it so that we don't need that manual minting layer. We can automate it between currencies, because you can take currency A and burn it and use the proof of burn to mint currency B. That reforge mechanism is really, really, really groundbreaking. It's what gives us and our kind of full stack stablecoin solution, it gives it superpowers. We can create so many custom things for different enterprises, whereas a lot of the other things that we see is just like standalone solutions like USDC or USDT. It's kind of lost the gist of it when it comes to the programmable money part. It also makes it possible for our solutions to work cross-chain seamlessly. So one client might need something on Solana and another client might want a coin on Ethereum, for example. With that, it means that we can burn the token from Solana and issue it on Ethereum. And that level of fungibility is something that others really don't do in the same way. Sorry. Hey, Google, stop the alarm. Speaking of AI, Reforge made our solutions way more fungible and intraoperable when it comes to different blockchains and different services. We have had interest from clients that want to have a gold-backed stablecoin on the base network, and we have had others who have shown interest only on Linea, for example. And just because we create something over here and we create something over here does not mean that these two things should not be fully fungible. And this is what Reforge enables us to do. The final piece of this Aryze kind of narrative is recently we partnered up with a big company, MasterCard. MasterCard Open Finance offers open banking solutions where you can use essentially code to move money between banks. And that's really, really important. That's really amazing because it's like an alternative to the card schemes, to the top-ups. Let's say that I want to send $100 to or 100 euros to a crypto exchange. I can do a bank transfer, I can do a card top-up, or sometimes I can do this pay by bank via open banking. This is by far the cheaper alternative, or as cheap as the bank transfer, you can say, but it's instant. Whereas the bank transfer can take several days, the card top-up, the fees are ridiculous, and open banking and this, we call it pay by bank, that is something that's really interesting because it enables, for example, a crypto exchange to sell their products, their tokens, without having the risk of chargebacks and currency risk exposures and all the issues related with accepting bank payments or card payments, the time it takes, the fees it costs, the risk with the middlemen. With Pay by Bank, platforms can accept payments from the bank world instantly. So what we did is we partnered up with MasterCard and integrated our products and services with the realm of open banking and open finance, making us essentially the only issuer out there, the only company that I at least know of in our sector who can mint on demand. If a municipality needs a specific coin, say MUSD, municipality USD, for a specific project in a given municipality, we can issue that token. That can be convertible and fungible across all of the other things in that project, and it can be on and off ramped instantly into dumb money via this open banking rail. If an enterprise solution wants to do a $10 million trade, they need an exchange which has maybe $50 million in dollar liquidity to handle that. I know there's different kinds of exchanges, there's order books, there's automated market making, there's different concentrations of the liquidity, and I know it varies, right? So some Tether or Circle fans might say that no, that's the best way to go. Let's just issue a bunch of US debt and put it behind a USDT that would then issue, maybe. Our solution is we don't need to pre-mint anything. If you need smart dollars, we can mint those smart dollars on demand and we can redeem them on demand. And that is really, really cool. That's really, really, really unique. It's things like that that make it so that we in Aryze are way more relevant when it comes to exotic currencies. For example, if we created an Armenian dram, or somebody else like Tether or Circle created an Armenian dram, all the other solutions require pre-minted volume and pre-minted stablecoins for this to even be a coin that has a market cap that's worthwhile using for anything at all. Whereas we say, well, if a project in Armenia needs smart dram, e-dram, let's just issue it on demand. Let's just mint it on demand. We can take in major currencies and use the value of that to issue what we need to issue on the other side. Now, of course, there is the currency risk exposure, there's the backing, there's the solvency of everything. We have always aimed to be best in class. We have always aimed to be transparent. I think for the past 5+ years, we've worked with Grant Thornton for solvency checks and audits. Let's say that, a municipality or Walmart or anyone needs a coin of sorts, a payment solution. There can be no doubt about the solvency and the legality of this solution. And when it comes to how the sector still kind of operates today, there's a bunch of questions about the legality and the solvency of these things. And then to the fungibility, the convertibility, and the passportability of these things. How is it even becoming global? Aryze has been at this for almost 10 years, and that's why we have not forgotten the core ideologies that lie behind our smart money mission. The newcomers in this sector, the ones that have joined the last 4 or 5 years, are joining a realm which is becoming, on some level, similar to what we're supposed to be trying to escape. Just using a shelf product stablecoin on a shelf product exchange to essentially add the same middlemen, the same mediators, just in a different way. I don't think that's the way to go. I think that everybody should look at blockchain and these technologies as an expanding, growing, agile, fast-paced technology, very similarly to AI. And just because ChatGPT does this today does not mean that ChatGPT is going to do the same thing tomorrow. Very same thing with AI. Very same thing with blockchain. It's a fast-paced, ever-changing sector, which has now reached a level of maturity that it makes it extremely useful, to a degree that if you don't use it wisely, you're missing out. Again, similarly to artificial intelligence, that if not used wisely, there's something wrong. You need to be able to use it. Aryze wants to be kind of your Scandinavian stamp of approval. Denmark is probably one of the hardest places on planet Earth to be able to work with money, with finance. It's very, very regulated, and in EU regulation is probably at the top of the challenges. It's the hardest place to do these things, one of the hardest places. But we, in the same way as other awesome things from Denmark, like Vestas or Novo or Lego or Maersk or Echo Shoes or coding languages and gaming engines, a lot of quality stuff can come from Denmark and from the value set the Danish DNA brings. And we decided we're going to do it from here because then the world is our playground. We can do business everywhere. And we have maintained that kind of mantra throughout. And yeah, we very, very much would like to speak with anybody who has interesting projects they want to see where smart money can help them, can help you. I don't think there is a single sector that could not benefit from blockchain and cryptocurrencies. So it's mostly about understanding for you what you can do with and how these technologies can help you solve real world issues, real life issues. And I at least don't expect anyone I'm speaking with to be tech savvy. There's this whole attitude that you need to understand blockchain and crypto and wallets in order to have a wallet, in order to use it. Like, that's super naive in my opinion. I think that, my mom, she started using AI because Snapchat added an AI bot, not because she had an Anthropic subscription or an OpenAI Codex user, right? So there is the technology behind the scenes, and then there's the application layers. And blockchain will become an invisible component of payments. It'll be the magnet strip, not the credit card. And Aryze can help you navigate that. We can help you solve the solution using magnetism in the same way as the credit card made it way more efficient to handle digital money in that era. This has not been easy for me. Just kind of shooting from the hip for 40 plus minutes and not getting a reply from the audience, but I hope that you have enjoyed this, and feel free to reach out to us at Aryze if there is anything at all that you want to speak with us about. I myself, after now 8+ years, have taken the role now of head of innovation. So I will build the Aryze Innovation Lab, figure out how we take the amazing foundational layer we have built for smart money and then build layers on top. Very much fascinated by the RWA sector, real world assets, tokenized assets. I think that's really fascinating. Very much interested in the gaming industry, not so much not like gambling, but the sports betting industry, the gaming industry, and the management of sports as an industry as a whole. And I'm very much interested in central bank digital currencies and municipality projects, government adjacent projects. If there's anything at all, guys, reach out to us. We'll be very happy to be your Scandinavian friend in need, coming from the most digital country in the world and one of the most prominent fintech companies that we have out there. Aryze.